Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, thank you for having me once again.
I have this vision in my head that the stock markets right now are kind of like Wile E. Coyote when he's right at the edge of the cliff, and instead of stepping into space like he usually does, he's managed to grab a handful of grass or a root, but he's dangling there and he's wondering, how long can I hold on? Is that what the markets are like right now?
You know, that is probably, in a nutshell, that is a great analogy, actually, because that's pretty much where we are. And, you know, to explain that technically, without getting, you know, too far down that technical rabbit hole, you know, ever since the February low and the rally that followed, the market has been on that slippery slope. It has been in a very, how do I say this, vulnerable and fragile position. But at the same time, it hasn't broken. And so, as you described, like I said, that's a pretty good analogy. You know, it's hanging on the side of the cliff by a hair, you know, by some grass roots. And the question is, can it get a grip, or is it gonna, you know, is it not? And if you walk through and look at the structure, when I say structure of a couple of the markets, you know, the structure tells you something. If you understand how to read the structure, I mean, we know, we've talked about for years how it's a bubble, it's a bubble, it's a bubble, it's a bubble, and we've been dealing with the bubble and it's just blown up. Well, now, you know, we're at this point because of this structural development since February where we find ourselves on this slippery slope. Well, what happens? Well, we don't all the way know yet, but if you look at the FTSE, for example, it broke below its February low, so the structure there tells me, you know, knowing that all of these markets generally move in a very similar cyclical rhythm, that everything else should follow. If you look at the Tel Aviv index, if I remember right, it broke below the February low yesterday. If you look at the AMEX, American Stock Exchange, it has broken back in March. I'm not looking at the chart, but in early March, I think it was around the 2nd or so, it broke below its February low. And I don't remember if it's broke below that March low or not. But point being, the structure there is broken. But if you look at the more of the mainstream averages, you know, the Dow Jones Industrial Average, you know, we broke below the low on a closing basis, but not on an intraday basis. So, you know, the market is still on the side of that slope. Where do we go from here? Depends on if we break or if we hold.
And how do we know it's broken? Because, you know, when you just look at the charts during the day, they're up, then they're down. When do you know it's actually on the way down?
I want to see two things. I want to see, if we see a Dow theory primary bearish trend change, which will occur if we see the industrials and the transports close below their February closing lows. If we see those two things, and which we have seen that on the industrials, we need to see the transports confirm it's what I'm saying. I'd like to see a joint close. Then we have a primary bearish trend change. From a cyclical perspective, I want to see the intraday lows violated intraday. And then that's going to give me the structural change from a cyclical perspective. At that point, you know, you have no argument that the market is not broken. I mean, you have to assume that it is because the structure has changed at that point. And so, from there, I mean, you just, like I said, you have to assume that the top has been in. Now, that said, here's what's going to happen. Here's what the crystal ball tells me. That if we get a primary bearish trend change, I know from the cyclical phasing, the cyclical timing, that it's going to occur with a low that is now due. If we didn't see the low on Friday, we get another push down, we get this primary bearish trend change, we have a cyclical low coming that's going to occur in conjunction with that, primary bearish trend change. But it's going to rally right as that primary bearish trend change has occurred, and no one is going to believe it. It is going to totally discredit the primary bearish trend change. And I've seen that happen time and time again. And then, once that rally has run its course, that's going to kind of be a test to the primary bearish trend change. If the structure with that rally unfolds negatively and the next sell signal comes, then that's when we go off the Niagara Fall, I think. I think that's the point where it will really, the chickens will come home to roost. But, so there's a few hurdles, but number one, do we get the primary bearish trend change, and do we get the accompanying structural violations? And we're close. I don't know. I mean, nobody knows that. If we get them, we get them. If we don't, we don't.
Well, we have so many people either saying we're about to have a crash, or the correction we had earlier in the year was enough to clear out the deadwood, and we can expect a climbing market that'll continue for quite some time. I think you're not in the second camp.
I'm not in the second camp because I think that we have been dealing with a bubble of biblical proportion. We've talked about that. We beat that dead horse to death. And, everybody, is, again, I think that has been totally dismissed because people think that, it's some kind of new norm, new environment that we live in. And if you're, like I've said a million times, if you're exposed to something that's completely abnormal long enough, then, at some point it becomes normal. And that's how people have viewed this bubble. And so we're in the topping process. We're in the ninth inning. I just don't know if it's strike one or strike three yet. We don't quite know that because we need to see this structure. If this market can hold, if Wile E. Coyote can claw himself back up above, over the cliff, then it is conceivably possible that we see, there's another push up in this thing before the setup materializes. But if the grassroots give and he tumbles just a little bit, then it's going to set the stage. But still there would be a rally. It's just that at that point, I would think it would be, while it's going to be a convincing rally, I think it's going to be lesser of a rally than if the structure can hold. That said, let me give you an example. And I'm saying this from memory. In 1999, I want to say it was September the 23rd of 1999, a primary bearish trend change was given. And Richard Russell made the call, and in looking back at the Dow theory, it was the perfect call. Absolutely dead on. He was 100% right. And the market rolled over into a low, and I'm not looking at the chart. I haven't looked at it. I don't all the way remember, but I want to say it was October, November. The markets rolled over into some lows. It was an intermediate degree low. The transports failed to confirm the advance, but the industrials actually moved to a new high into January of 2000. And it completely, to the untrained, unknowledgeable Dow theorist, or someone that wants to discredit the theory, it seemingly discredited the primary bearish trend change from September. And I know he took heat on that. The market did, the industrials moved to a new high after the primary bearish trend change occurred. But that was the perfect call. It was the perfect signal, and we all know what ultimately happened after that. So you may not know exactly how something is going to transpire or unfold after the signal is given. The thing is can the signal stick? Knowing the rules, can the signal stick? And so that's kind of what I'm saying with, number one, we got to get the signal. And then number two, there will be a rally. I promise you. It's coming. As soon as we get the signal, there's going to be a rally. We're set up for it. And that rally is going to be, it's going to discredit the signal.
We'll have more with Tim Cyclesman Wood right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, you know how we always have these cute little sayings, sell in May, go away. How about it could get harsh, sell in March?
Never heard that one, but
I just made it up.
That is correct.
Yeah, I just made it up.
Like I said, bounce into April or May, and then we get that next cyclical top, and then I look for, I don't see the next intermediate term low until June to July time frame. So, if we get the signal and bounce here, absolutely. I mean, it's going to be harsh, and it's also going to be sell in May and go away. It's going to be both.
Yeah, no, when you said you'd never heard of it could get harsh, sell in March, I just made that up because I thought things are happening a little faster than they usually do. And I've noticed that over the last couple of years, you might expect a major correction or a crash in October or November, but it happens the last big one was in August. Everything now, right. I think because perhaps of robot trading, everything happens a little faster, about a month ahead of what it used to.
Right. Well, what I want to also explain to people, and I understand and I see this. I see it. I hear it. I hear it from people talking at the gym. I see it on, some of the social media stuff. I hear it from I see it in text. I got a text from someone yesterday that knows nothing about the market, but, I knew him in a different profession, a different life years and years ago. And it is amazing to me. People do not understand. That's the dangerous thing here. They do not. There's people like myself and your other guests and some of my mentors I've mentioned, like Peter Eliades and some of the other, Bob Prechter and some of these other guys who have warned about this bubble and, for years. They've been laughed at and discredited, and people do not believe this stuff. But on that note, someone told me that the new Fed chairman, that they were reviewing some notes or whatever, Fed minutes or something like that, or he mentioned something to the effect that they talked about how it was a bubble in 2012. Well, Trump talked about it being a bubble in 2016 when he was running for office before, during the election. And it's even more of a bubble now. And so what I'm saying is that I guess the message is that people do not understand what we are dealing with here because it's gone on for so long. And, like I said, the key is we need that primary bearish trend change to break it. But then once that happens, the danger is that they don't realize what's occurring. They just don't understand what's occurring. And when I said when the rally out of the 09 low began, which was a long, long time ago, I said the longer it goes on, the more dangerous it will become. And that's what I meant. I just didn't understand how profound that statement was. But people do not understand what the unwinding of this bubble is going to look like.
Well, I almost think too, it's like, you have a helium balloon and you're pumping it up, but at some point that balloon is going to escape out of your hands, and because you're not holding on to it, all the gas in it's going to escape and it's going to crash.
Yeah, and this is going to be more like the Hindenburg, I'm afraid.
We'll have more with Tim Cyclesman Wood right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Tim Cyclesman Wood. Tim, with a bubble that's probably very close to bursting, what do you see happening with the precious metals?
Initially, I think that the commodities are going to go down as well. I've said that. I know they've held up longer than anticipated. They haven't made new highs. Where they're still just treading water. So, while on the one hand, they have held on to keep people optimistic, on the other hand, they haven't gone anywhere. And so I think if you look back, everybody wants to say that, in times of crisis, that, gold is going to rally and this is going to do this and this is going to do that. Well, the reality of it is that it depends on the cycle. It depends on how the cycles are set up. Sometimes when the dollar goes up, gold goes down. Sometimes when the dollar goes up, gold goes up. Sometimes when the dollar goes up, oil goes up. You get into big trouble when you start drawing these hard correlations and say, if this happens, then this is going to happen. It depends on the cycle, and if the cycle is set up for it and structured for it, then yeah, that's what, you may or may not have whatever the relationship is, but the cycle is going to tell you. And so that all said, I'm rambling a bit here, but in the great crash of 29, for example, commodities, bonds, everything went down. Bonds rallied initially, and then once the reckoning kind of occurred, everything went down. There was no escape. And, I tend to think that that's the kind of scenario that we're facing here. Now, if the 9-year cycle low in gold does in fact still lie ahead, then in this case, I do think that, eventually, if we get the washout into that 9-year cycle low, then yeah, metals may be the safe haven here. But, we've talked about that before, that there's a bit of an oddity going on because it's held on. If gold would just have broken and moved into a clear 9-year cycle low, then, we could say, yeah, we're set up for gold to be positive here, but it hasn't. And so I still think that the break into the 9-year cycle low is ahead, and then once that occurs, yeah, I can be positive on gold, and it may end up being a safe haven. But not at this juncture. I don't see it.
Is copper still a good indicator of what's going to happen with the economy? It's down below $3.
Yeah, there is a base metals. I stumbled across it actually. I was looking at some different charts, and I stumbled across it was just a base metals fund, and it's kind of weird that it came up and that you asked that question. But the thing that I found quickly in looking at that, and like I said, it was a complete accident, but that base metals fund had begun to roll over, and so I went back and looked at the history of it. And, it was a very good indication of metals I say metals, I'm speaking gold, silver, precious metals, but the base metals fund was a very good indication of, the precious metals at the 9-year cycle tops and, the higher, and even the lower degree tops. So it had already begun to roll over. And, again, I think you're right in that statement, and I think that all of the metals, all of the commodities, I realize that crude oil has retested its previous high. It's like everything else, it's held on longer than anticipated, but I still think lower prices are in general ahead.
I was just going to ask about crude oil because now it's springtime. We're going into the traditional driving season. Will there be a big demand, or, of course, if the economy has a downturn along with the markets? And does the economy follow the markets, or can they run separately?
Well, I guess that's the question in everybody's mind. Is it the chicken or the egg? and I don't know that I know the answer to that. I mean, I feel like that the market in a truly, how do I say this, in a truly free market, where it is, when I say free, that is free of any kind of interference or manipulation or that sort of thing, I think the market is an excellent indicator of the economy. But when you have quantitative easing and meddling in the market, you can tell me that this is the greatest economy since whenever all you want. I was alive and well and working in the telecommunications industry. I remember the economy in the 90s, and that was a real thriving economy. Not now. So, someone can blow that smoke and bullshit statistics somewhere else, because, you can look at the job participation rate, you can look at some hard data, and what we have here is not an economy. So, in this day and age, no, the market is not a true reflection of the economy. I think at one point in history it used to be. As far as crude oil, you mentioned in the driving season, we have another oddity there. Typically you see cycle lows. There's an annual cycle, then there's a 3-year cycle in the CRB index. But typically you see that annual cycle low in the December, January, February type time frame. Maybe it'll occur in March or so, but in the first part of the year, the colder, the pre-driving season, and then you're right, the seasonality, the general seasonality of crude oil and gasoline is that, of course, in the summer driving season that it rallies, and then it tends to peak somewhere in the June, July, August type time frame and roll over, and there you have your cycle. Where we're kind of set up counter-cyclical to that now, which may be an indication of something going on with the economy, because, we're hanging here at still this annual degree cycle high that has not yet turned down. So, I think we may see a little something different. At least we're set up to see a little something different with that seasonality this year.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. You can find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.